career. Jordan's decision to sell ends his unsuccessful 13-year run overseeing the Hornets. During that time, Jordan's decision to sell ends his unsuccessful 13-year run overseeing the Hornets. During that time, team has never won a playoff series or finished higher than 6 in the Eastern Conference. The Hornets have also had the 5th worst winning percentage in the NBA. Yet, Jordan could make $1 or even $2 billion on the deal. That, according to sports business analyst Joe Pompliano. That's more, by the way, if he does. If Jordan makes $2 billion, that would be more than he made from Nike and his entire playing career. Let's bring in Joe Pompliano, investor at Pomp Investments, the host of the Joe Pomp Show podcast. Joe, I mean, we don't know the final numbers, but if those numbers that you're banding around are right, like literally 30 years of making a bunch of money, Jordan will make more money than all those 30 combined.
Yeah, thanks for having me, Brian. I think there's a couple of different ways to look at this deal, really. On one hand, many people are going to say that Michael Jordan failed as an NBA owner. Over the last 13 years that he's owned the team, they've objectively been one of the worst teams in the NBA. All the stats that you just read, right? They haven't made the playoffs but 3 times. They've never won a playoff series. They have the 5th worst winning percentage in the league over that time period. Some people are going to say that. But on the other hand, a lot of people are going to say that he objectively won as an NBA owner simply because he was able to sell this franchise for reported $3 billion. And I want to give you a little bit of context on how big of a number that is. So you mentioned it. Michael Jordan bought the team in 2010 at a valuation of around $270 million. He sold a 20% stake in 2020 at $1.5 billion valuation. And now 3 years later, he's selling the rest of the team, the bigger majority piece, at a $3 billion valuation. That's 11 times their current revenue. And the average NBA or NFL team would typically trade at a 6 to 7 times revenue multiple. So I think this speaks more about the NBA as a whole and the product rather than Michael Jordan and the Charlotte Hornets specifically.
Yeah, because Joe, I'll ask you, does it matter if you're a good NBA team? I don't think it does.
Yeah, it matters
kind of like where you're located probably matters more than if you haven't won a game in 5 years. I don't think it would have affected the valuation at all.
The media rights certainly play a big deal. And I think that's one of the reasons why it sold for such a multiple is because the NBA is now going to go out and they're in a negotiating window now where they have a $25 billion media rights deal and they think they can get 50 to 75 billion on their next deal. So I think you look at it and you say, this is a scarce asset. There's only 30 of them. Everyone wants one. They don't go up for sale often. We have to pay a premium for this. And I think Michael Jordan just sat there and said, hey, I could wait a couple more years when this new media rights deal gets announced, but why not sell today? $3 billion is a lot of money, and it's probably more than the team is worth at its current rate today.
Let's switch gears. You had a story earlier this week about the burgeoning business of companies that basically lend money to athletes earlier in their career for a cut of future earnings. Now, if the athlete goes on to be a bust, it doesn't matter, but for stars like Ellie De La Cruz and others, they could end up basically owing millions. There's nothing wrong with this, but at the same time, do these players have any recourse or they have to sign a contract? Got to give me 8% of your salary no matter how much you ever make.
Yeah, so the company that I wrote about is called Big League Advantage, and it was founded in 2016 by a former minor league baseball player named Michael Schwimmer. And the business model is actually pretty simple. They give a cash upfront payment to minor league baseball players primarily, and they get in exchange a percentage of your future revenue that you make in the MLB. So the catch is that you don't have to pay back any money unless you make it to Major League Baseball. So they kind of work on a venture capital model rather than just a traditional bank that's loaning money, and they really hunt for the big fish. So the examples that I talked about and you just referenced there were Fernando Tatis Jr. and Ellie De La Cruz, because those are really the players that are going to make them a lot of money, because 70 to 80% of the players that they invest in actually don't make it to Major League Baseball and don't give them any money in return. So it's kind of this weird thing where it may feel a little weird and it feels like it's not the correct thing to do. But ultimately, objectively, 80% of these players are getting a great deal because they're getting a loan that they never have to pay back.
Why do they? I mean, okay, fair enough, but you get a signing bonus. But let's be clear. A lot of these players probably are taking these loans for reasons that a more financially responsible person might view as not the best decision.
Yeah, exactly. So My understanding is some of these players do the intelligent thing, which I would call, which is use the money to increase their chances of making it to Major League Baseball, whether that's hiring a nutritionist or a chef, hiring a personal trainer, getting a better apartment, getting physical therapy, whatever it is. And the reason why they have to do that is because the salaries in Major League Baseball have historically been so low. They doubled salaries over the past year, and still the average minor league baseball player is still only making $20,000 to $30,000 annually.